online classes are wonderful because I don't know if anybody is listening to me or not. And that is why I want to be sure that that there are people listening to me before I spend hours talking to myself. So can anybody just introduce themselves, tell me your name, your company, and what you want to learn from this class? Very quickly, please. Anybody, please. Okay. Nobody is talking. That means I'm talking to myself if I continue. I think that might be the meaning.
Hello, morning, Mr. Film. Can you hear me?
Okay. I think people prefer to send messages than to. Okay, I can see that some people are actually sending messages. So I think I can go on assuming that people can hear me. So fixed asset management, what do you want to learn from this class is a question I would have loved to get responses to, but I think I'll go on, notwithstanding. What are fixed assets? You know them already, really. Fixed asset, property, plant, and equipment. Remember, the whole idea around this is how do we manage our fixed asset for optimal results? That's the whole essence. That's the whole reason why we are gathered here. So how do we manage the fixed asset? The sincere truth is that you can have a lot of very expensive fixed assets that are not giving any value or that are not helping the company generate the revenue it wants to generate. Remember that the bigger the assets you have, the expectation would have been the more revenue you can generate. So if you have investment in assets, whether they are intangible assets or tangible assets, the reason why you invested in them is because you want to either increase revenue, reduce costs, and ensure efficiency. That would be the real reason. So you want to increase revenue, reduce costs, or for example, the reason why some people would have gone before now, what we find is a lot of companies having diesel generators, very big, massive diesel generators. And that was the same thing that was even happening in Aso Rock before. All of a sudden, Aso Rock now moved from diesel generators to solar panels, a lot of solar panels. And I saw something on Facebook, and the guy was saying, is this is so please ground rules so that if you're in, you're not saying anything yet, you can just mute. So when you have something to say, you can just unmute so that we can all hear ourselves. So in Aso Rock, they had to move from diesel generators to what do you call it? To please, if you're not saying anything, help me mute. They had to move from diesel generators to solar panels. So the reason why they moved to solar panels probably is because of the fact that they want to be able to reduce costs, or they want to be able to be more efficient at what they are doing, even there in the house. So basically, the whole essence around fixed asset management is to generate more revenue, reduce costs, enhance efficiency, enhance value for money. That is the real essence for managing fixed assets. So if you manage it well, those things will improve. If you manage them poorly, those things will actually disimprove. Or let's put it that those things will actually have issues, yeah, and they might not actually improve, yeah. So let's talk a little bit about what fixed assets are. Fixed assets basically are supposed to be tangible assets that you are holding for use in the ordinary course of business, or you are holding for administrative purpose, or you are holding for rental purpose, as far as those assets will give you future economic benefits in more than one accounting period. At that point in time, you say this is fixed assets. So it is fixed because economic benefit you will get from that asset will be used for more than one accounting period. And those assets are tangible and they are being used whether for administrative purpose, for rental purpose, for production. If these things are met, you say you have fixed assets. And we are talking about the management of that fixed asset. Any questions at this point?
No, sir.
Okay, so let me just take it a step further. So if these are the fixed assets we're talking about, I want to put them in very simple. Remember that tangible assets could be current or non-current. You could have a tangible assets that you will consume within, let's say, 6 months or 12 months, or 10 months or 8 months. You could have those ones that you will consume in less than 1 year are the ones that we say they are current, because the economic benefit you get from them will be fully used in less than 12 months. So we say those ones are current. So those kind of assets that you will say are current are those ones that are expected to be utilized in the normal operating cycle of the company, fully consumed, and in some cases they are held for trading. Yeah, for example, inventory, they are holding them for trading. They hold them to buy and sell. Yeah, so those ones that actually function in that place, you will call them current. Current and not non-current. All those ones that are current, they are actually also could be cash and cash equivalent. I'm talking about assets now, whether they are cash or they are not cash. But the non-current ones are the ones that are, for example, like PP&E. All of those ones that are going to be usable in more than, or that will give you economic benefits in more than 12 months. And an example will be PP&E. If I switch this a little bit and I say, let me include all assets, not just tangible. Let me also look at the intangible ones. Then you'll be seeing intangible assets in there as also a non-current asset. So we are focused on how do we manage the fixed assets? Yeah, and those are the tangible ones. How do we manage those tangible ones? Let me ask a question at this point. Like all the classes, I always tell people, I'm actually not a teacher or a lecturer, so I'm going to be asking more questions. For example, motorcycle purchased by a company to be used as a gift to staff. Is this PP&E? Motorcycle purchased by that.
It cannot be classified under PP&E because
So where will
like
I put
a
that one?
gift.
It's a gift
So
now.
how will I account for it?
Maybe staff welfare.
You will expense it.
We expense it, even if it's a car. If you are giving a car out, it is still going to be expense because it's not giving the company economic benefit for more than 12 months, really. Yeah. So what about companies operating car being used by all staff? Companies operational car being used by all staff, pool car.
It's a PP now.
Okay, it's PP.
It's PP&E, yeah, because it's
Yes.
used. Okay. What about staplers purchased to be used in the company? Staplers normally stay good for period between 6 and 60 months. Now, if you go to some company, you see stapler of 5 years ago. So should I call them, are they PP&E?
Yes.
You expense it.
Okay, so
No, it's
I have
PP&E.
so I have
It's not
two,
PP&E, but
I'm asking. Yeah, I'm the one asking. Is it PP&E or not? So somebody said you would expense them. Somebody said it's PP&E. So the person that said PP&E, since it's two opinions now, why? Why would it be PP&E? And the person that said expense it, why? Hello? The person that said PP&E, please, you can unmute to talk so that we can hear you. And the person that said is expensed, why? Tell us why so that we can all learn. Please, can everybody still hear me?
Very well, sir. We can hear you.
We can hear you, sir.
The people that said it's PP&E, should it be? Why should it be? And the people that said not PP&E, why should it be? Because any one of those opinions could be wonderful.
It's
Could be right.
immaterial. It should be expense. It's immaterial.
Why would you say immateriality? Does it affect accounting and bookkeeping? Does materiality affect bookkeeping? Because something is 5 naira, does it mean we should not capitalize it? I'm just thinking aloud. But let me just answer that really. Now, the reason why the person that said expense it meant that was because, number one, it is for it to be PP&E, it must be expected that it will give us future economic benefit for more than 12 months. In this example I painted here, we said it stays good for 6 to 60 months. So sometimes it could get spoiled the second day. It could get spoiled the next 3 days. It could get spoiled in the next 7 months. So you are not sure, but expectedly, you are saying that sometimes it might not even work for up to 1 year based on the way they are. If you buy China stapler now, you know that is by prayer it will stay for 1 year. Yeah. So if you look at the expectation of the life, you will discover that the expectation is might normally be less than 12 months, even if some will stay good for 5 years. So looking at that, based on the expectation, you will say that particular thing is just an inventory, is a consumable, and those consumables, you expense them during the year. If they have not been put into use, then you can, or they are actually in the store, they are consumables in the store. So at that point, you won't expense them until you start using them. Remember, when it is PP&E, it is the point where it is available for use. But for when it is inventory, it is not when it's available for use alone. Because, for example, you could buy inventory and keep them in the store. They are still inventory. Yeah. So this particular stapler will be capitalized as inventory. And when you put them into use, you expense them. I want to believe that is taken really. What about mechanical spares that can be used for any of the machines in the factory? Like you have like mechanical spares that can be used for any of the equipment. Whenever any of the equipment have issues, you just pick them and use them. Are they PP&E or not? I need answers. Mechanical spares, like spare parts that can be used with any other machine, are they PP&E or not?
They are not PP&E.
They are not PP&E. Okay. So the reason why they are not PP&E is because they can be used by any of the spares, or sorry, any of the equipment, and their life, remember, must be expected to be less than 12 months. So in practice, all of those kind of things like screws, screwdrivers, what else? Spark plug, and on. Engine oil, all of those kind of things, they are actually inventory. When you add them in your books, they are not fixed assets. But what about mechanical spares that can be used for a specific machine in the factory? Meaning when you were buying the machine, they also asked you to buy some specific spare parts that can only be used with that machine alone. Would that also be PP&E or inventory? Where would I put that?
But if it will be
I didn't get that.
PP&E.
PP&E.
Hello.
So if it is
Yes.
PP&E, so
The
what will be the
reason-
depreciation?
Hello.
How will I depreciate it? I can hear you, man.
Okay, so
So
the
if it
reason
is-
sorry, I just wanted to state the reason I picked that as PP&E. Can I go ahead?
Please go ahead, madam.
Okay, great. Okay, so the reason is that without these specific mechanical spares, I don't think those machines would work. And I think that's why they said they should have to get it at the factory. So if we remove that particular thing, it may not work efficiently or effectively as they want it to work, wherever they got it from.
Very correct. Very correct. So mechanical spares that are used for only specific assets, for only specific machines, they are actually part of that asset in itself. So effectively, they are actually PP&E because those assets in themselves will give you economic benefit for more than 12 months. So those spares could either elongate the life or make it to be operational. So because the characteristic of the asset itself is a PP&E, so also the spares will be a PP&E. So that said, let's take it a step further. I explained this already. I said the reason for any fixed assets management, the reason why we are doing all this is because we want to generate revenue. So the reason why you buy, for example, machines in the for the factory or in the company, or cars or tables or chairs, is because you expect to generate revenue. That's the reason why you're investing in them. Or whether you're buying a TV or you're buying a car or you're buying, you want to generate revenue. That's the reason. Or you want to increase the business value because you might be generating, because some of those revenue might not be instant revenue. Some of them might be short run, some of them might be long run. For the long run one, we say we're increasing the business value because if you're investing in those machines, so that you can actually build the value of the company, then we say the reason why you're managing that particular asset is to increase the business value. Yeah, and remember, at depreciation, for example, or at disposal, for example, if you dispose at the right time, yeah, you will discover that it could actually help you with liquidity issues. Now, for example, you have a very big, I see a lot of companies that have, I was doing a particular thing, I think it was 2010. It was the former Texaco that became former Chevron, then Texaco, then became another company that you all know about. And I was doing their IFRS conversion in 2010, I think 2009, 2010. And I asked for the fixed asset register. And I was seeing assets of 1968, 1973. And my question is, where are these assets? Because question is it still an asset? How can you have an asset in 2010 that was bought in 1972 and it's not land, it's not building, it's partitioning, it's a chair? Even if you manage the chair, that chair itself, it would have overused this. So when we looked at them, the question was, are they even still giving any economic benefits? So in the books of many companies, you have assets that are not giving any economic benefits, and they are just there. If they are not adding any value to the company, and they are just in the store, or they are actually taking space, fixed asset management will say, get value for it by selling it. So when you have them all scattered around, not giving any value, you are actually eating against liquidity, because you could have sold those things, and if you sell them, you have some liquid cash and you can use that for some operational runnings. So to an extent, fixed asset management will also still say, if it's not giving you the economic benefit you desire, then you can actually get some liquidity for it rather than keeping it and you are paying insurance on it and you are paying lightning on it and you are paying cooling on it, because the people that were supposed to actually sit down well, your store, rather than having one store, you now have 5 stores. What are they? What are those things inside the store? They are things that are never going to be used again. So why not get cash for them? And you can now ensure that you can plow back the cash into operations rather than using money to actually do insurance for what you will never use. So to an extent, that is some of the importance of managing the fixed asset in itself. Yep. So let me just take it a step further. Why would you manage? I think I've started talking about this. Why manage this PP&E? Number one, if you don't manage them well, one of the reasons why you want to manage them is to actually get the benefit from them. Remember that for it to even be a PP&E, you want to get economic benefit from them. So to ensure that you get the economic benefit from them, you must manage the PP&E. Don't say, yes, they should be working. Yes, they should be working. I was actually trying to do a process flow for a power generating plant, a power generating company. And I asked the engineer to explain to me. The man was very, very serious. He was giving me some explanation, technical explanation of how power is generated. At the point, I had to tell the man that, I just want to understand the process, I don't want to become an engineer. Now, in such a situation, from what he explained, there are some maintenance that are required. There are some maintenance that are daily. There are some that are weekly. There are some that are monthly. There are some that are planned every 6 months. Now, if those maintenance are not done, you might not know in the first 1 year the impact, or in the first 2 years the impact. But after 3 years, after 4 years, you will discover that the value of the asset, what is supposed to be generating economically for you, might not be the same thing it's generating any longer. Why? Because somebody did not manage the PP&E very well. Nigerian road is a wonderful example. I want to believe they built those roads with even spans. They gave us lifespans to say it will go 20 years, 30 years, 40 years, and you will discover that in the first 6 months, potholes have surfaced. One of the reasons for managing PP&E is to ensure that we fully get the economic benefits that we intend to get. And that is where maintenance, whether it is planned maintenance, whether it is recurrent maintenance, why they are very important and they are parts of the fixed asset management. Another reason why you must ensure that, or why you want to actually manage PP&E, is because to an extent you want to measure them appropriately. So if you go to many companies, and I put it to you in many of our companies, that you have fixed as you have a in the books of the company that is 10 naira. If you have cars in your company that if you go and check their value now, the cars are still running, and the book value is 10 naira because it has been fully depreciated. So let's talk a little bit as a business person. So the users of the financial statement, the prospective investors, the taxman, the vendors, the customers, when they see your financial statement, they see cars, and that particular car of 100 billion, as one of the value of one of them is 10 naira. But that car is still being used by a manager. The question will now be, is the value of the asset appropriate? Yes, you can tell us it's fully depreciated. Yes, you are speaking accounting terms, but it's fully depreciated, but the value of the asset. Do you know that there are some cars that you bought, say, for example, 30 million some 6 years ago? If you want to buy the same car now, it is actually going to be 70 million. So meaning that the value of the car that is 10 naira is now as much as 70 million. It has never happened in any economy that car will be appreciative. But looking at the dollar rate and all of those things in Nigeria, you could say that somehow, the value of that asset, rather than depreciating, somehow, some of them has appreciated. However, you cannot begin to pass that entry in the books. Where am I going to? The mere fact that we have those assets in our books and the value of those assets are not reflecting reality shows that we are not managing the fixed asset well. Why? Because one of the reasons for fixed asset management is to ensure appropriate measurement. So if you have in the books of your company 10 naira cars, you yourself, you know that it's impossible. It is impossible. So to an extent, that means that probably you are not managing fixed asset well. Another reason why you want to manage fixed asset well is to ensure that basically you are recording when it is acquired, controls are there to ensure that basically the fixed assets are classified well, managed well, that you are only buying what you have budgeted for. Because in a country where, or in a company where anything we want to buy is what we buy, the sincerity is that we will buy what we need and what we don't need. We will even buy what we need at the highest price, and you will discover that you have wasted the company's money. All this is within fixed asset management, from budgeting to acquisition to record keeping to safeguard to control to managing it to disposing it or derecognizing it is all within fixed asset management. And if you do it well, you'll begin to see efficient results in all these areas. Am I communicating? Any questions at this point as I take it a step further? I want to confirm that I'm not talking to myself. Can I take it a step further? Oh, this class is very quiet.
Good morning, sir.
Morning. Okay. Can any questions for me? Can I take it a step further?
I have a question, sir.
Please go ahead.
Okay, thank you, sir. You talked about the car that has been fully depreciated, and yes, the company still generates economic value from the car. So in the books of the organization, what is the appropriate entry to pass, being that the car has been fully depreciated and yet it is still giving the organization economic value? Yes. So, but how do we pass any entry to, what are we supposed to do as an organization to ensure we carry out like a good fixed asset management in that regard?
Okay, so let me go and answer the question, even if I would have loved to answer it later. So I want to open an Excel sheet so that I'll use it to practicalize what IAS 16 requires and what you are supposed to do. Okay, so if you can see my Excel sheet, you say the eyes have it. In Nigeria, everybody either. Please, can you see my Excel sheet so that I can use it? So, can you see my Excel sheet? Let's assume we have a car.
Yes, we can.
Okay. Okay. So, let's assume we have a car that we bought 100 million. I don't know whether it reached 100 million. Let me check. Okay. Let's say it's 100 million. And we assume that the useful life was going to be 4 years. And we said a residual value was going to be 0 naira. Now, having a car with a residual value of 0 naira, after 4 years, you know that it doesn't make sense. Why? Because what is useful? Let me explain this concept. Useful life is the period over which management would want to get economic benefits from the use of the assets. So it is the period over which management would want to get economic benefit from the use of the asset. So it effectively is saying it is not really a question of will the car be able to will be usable for 20 years or 50 years. Because the car they finish using 4 years in Canada, they bring it to Nigeria. You do now start it again from year one. You do testimony in church. Then you now start it from year one again. Then when that person finish using it, another person after using it for 5 years will now start again from that point. That tells you that the useful life is only the period that management want to use it, not the total life of that asset. So the useful life is not the economic life. The economic life is the period that that asset can give you value. Useful life is the period over which you want to use it. Okay, so Mr. Jonathan, you said hello. Can I go on? Is there any question for me? Can I go on? You said hello, so please, can I take it a step further?
Please do, sir.
Okay. Useful residual value is now the value of the asset or expected value of the asset after use. When I mean after use, I'm talking about after the useful or expected useful life. So meaning that we are saying by policy, the value of the assets, 100 million cow that you buy in Nigeria, after 4 years, the value to the company is zero. I practically believe that that is impossible. So whenever we have companies that have copy and paste policy, because a bank is having their policy as 4 years residual value zero, you too, you copy and paste that. But the sincere truth is that in reality, that's not true. If your company felt the value was zero, then they would have given it to the staff. But you know your company will not even give it to the staff. That means that they put a value on it. And that means that your policy should not be copy and paste of what you just find online. Because residual value only means the value at the end of the useful life. So let's assume this in my example here. Let's forget any other thing. So what I'm trying to say in essence is that fixed asset management starts from policy development. If the people that develop the policy did copy and paste, you're already having a fixed asset management policy issue. And you might not be able to manage it well. That's the reason why you have 10 naira car in your book. It starts from policy. I'm just trying to answer that. So let's assume this is the case. That means at the end of year one, the cost remains 100 million and the depreciation for that period is equals to this minus this. That means the NBV will then be this, which you know already. Now, this is what we have been doing, but this is not really IFRS. What IFRS 16, IAS 16 requires, I'm now going to put it on this side. What IAS 16 requires is now that at the end of each accounting period, let me do year two first. Year two. So in year two, in this, the way we have been doing it, we will just continue the same thing. Cost will be cost. Depreciation will be the same depreciation last year, and NBV will now be cost. Let me put Akum Deep here too. Akum depreciation. Akum depreciation here is the same amount here, and Akum depreciation here is this one. So in this case, Akum Deep will be what depreciation is this year plus the Akum Deep, depreciation from so I have that. So the NBV is still 100 minus this. Now, this is what we'll be doing, what many companies do. But the way IFRS, the IAS 16 requires it, when you have done depreciation, which is the same thing here, let me just copy this one here. Okay. Let me put this here. This one is, let me just drag this in here. So I don't want to absolute it too. Okay, so this is it. However, the standard now requires that at each end of the year, you need to review residual useful life, remaining useful life on the asset. And you need to also review the residual value. So what does that mean? And you are reviewing it prospective. What do I mean? It means that based on after you have used the asset by the end of the year, you are now asking, this asset, based on what we are using, is going to remain 3 years useful life. You now ask yourself a question. This car, in reality, is your company thinking of changing it in 3 years? You now say, in practice, so the company, they not go buy another one until 5 years. I will say useful life has now changed to 5 years. Prospective. Residual value, you now ask yourself, with the economy of Nigeria, can we say, you have a question?
Take.
Can I go on? I think the take is not for me.
You can go on, sir.
Okay. Okay. So I think. Okay, so the residual value, you now ask yourself at the end of year one and say the residual, based on the economy of Nigeria, the residual value of this asset after we finish using it, will it be zero? Because the company will not give anybody a 0 naira. And we know that this company will sell it. We now say, what value do they normally sell it? We say, based on fact, they normally sell it to at 25% of the cost. I'm just assuming. So we have reviewed useful life and residual value. So in year two, what will be the impact of this? The cost is still the same thing, but the depreciation in year two will now be based on the NBV from year one minus residual value that they now have divided by the new useful life. So the depreciation in year two will not be 25, it will now be 10. And ACUM-DIP will be equals to depreciation in year two and the ACUM-DIP from year one. And NBV will now be equals to 3065, like you see it here. So number one, you cannot go back to revalue the asset. Why? Because there are two models for treating fixed assets or PP&E. They call one cost model and they call one revaluation model. You choose one based on the class of an asset and you continue doing the same thing continuously. So you cannot just wake up in the morning and say, no, I want to do revaluation this year. Next year, you want to know, you choose the one you want to do. And if you have chosen costs, like the example I painted here, you will carry the cross like that. So this is what we are supposed to be doing before the end of the year, so that we don't have 10 naira in the books. So the reason why we have 10 naira is because we're not doing this. Madam, I've answered your question. So if it is now 10 naira, you cannot revalue it. But for the other ones, you can now continue doing the correcting. I've answered your question, ma'am. Okay.
Yes, thank you, sir.
Okay, so let me take it a step further. So it is continuous fixed asset management correctly that will help you to ensure that you don't have 10 naira. So there's no quick fix of just adding money on it and say that let us move on. Nothing like that. So let's take it a step further and let's talk about the benefits of fixed asset management. If you manage your fixed asset well, the fixed asset will last you longer. For example, your car. You manage it well by doing maintenance. When you're supposed to do maintenance, you will discover that performance will actually improve. And performance will yield financial performance, because performance includes, if your car is working well, it will be able to get you to meetings faster. And those meetings, you wouldn't have to actually be paying Uber to go there, and it will reduce the direct cost. Apart from that, it will actually help you with asset investment decisions. For example, if you keep track, so in some companies, you will discover that they only use HP. In some companies, they only use Lenovo. In some companies, they only use, but the other companies, now anyone that they use. Anyone. Why? Because it's possible they've not even done their fixed asset management well to be able to know which kind of brand serve us better. Now, it is a function of the kind of work you do. For example, you want to do Uber. You are now using Escalade. Even if you are using Escalade or you are using what's the name of this, BMW, the sincere truth is that the maintenance cost will kill the business itself. Why? Because you have not done proper asset investment decision. Because you have not looked at the business you are doing and the kind of asset you should be buying. What will help you to do that better? Proper fixed asset management. Another benefit of fixed asset management is risk management. The mere fact that you can put controls to, not at some point you might not be able to eliminate risk, but you are able to reduce risk. For example, many cars that are into haulage, like Dangote, for example, they do tracking. So they track those cars or those haulage vans and haulage trucks, what are they doing? Risk management. Another major reason or benefit of fixed asset management is the output. Better output and service is what you get for proper fixed asset management. And remember, all this will give you efficiency, and you will discover that the company will continue as a better company in the future. Many companies have died because they didn't do proper fixed asset management. Come to think of it, you will discover that before now, Mr. Biggs was everywhere in Nigeria. All of a sudden, Mr. Biggs is not everywhere in Nigeria again. Other ones have now probably taken over, or they now have better competition. If you want to look at their model, please go and check the fixed asset management of that particular company. You will see some of the things that happened in there. But let's take it a step further. Yeah. So all this are the benefits we'll get by doing proper fixed asset management. Yeah. So let's talk about what fixed asset management will be then. So fixed asset management is just that process of ensuring that the assets are maintained properly throughout the life cycle of that particular asset. And when I'm talking about the life cycle, I'm talking about when you're planning to get it, budgeting, need analysis, determining whether the need is required in this particular location or that particular location, planning, or the process of acquisition, which is selection, identifying who will actually bring it in for you, approving the purchase acquisition note, installation, payment, and all that. All the process of even operation, which will include the using it, whether you're using it well or you're not using it well. I discovered this one thing about police vans. If they give them van, in less than 6 months, the van will not look like the same thing again. However, if you look at their car, their personal car, in 6 months, if you see police car, they always, even if the car is Volkswagen, the way they would decorate the car, it will be neat. But if it is the government van, that thing will spoil in 6 months. What is the problem? Operations and maintenance. The use. Don't be my papa get up. Now government property. It is all about use and maintenance. So if you look at the fixed asset management, what do you call it? Fixed asset management policy of police, for example, you will discover that it might not be the best. In some other countries, like Dubai, they will be using BMW. But trust me, if they give them BMW in Nigeria, oh, that thing that scatters in 6 months, it will scatter in 2 months. Because and the last process will be when you are no longer using those assets or you are disposing them with it. So throughout this life cycle, ensuring that the asset is tracked, the asset is monitored, you improve the performance of the asset to get the output that you require, and looking at that, you are optimizing the useful life and the total value of the asset. That is what fixed asset management is all about. And we'll be looking at this as we go on. Any questions as I take it a little step further? Any questions? Can I take it a step further? Yeah. So taking it a step further, the procurement stage normally will have, even before the procurement, there's always a planning stage. So the planning stage includes budgeting. Even before budgeting, it is policy development. What kind of assets do we buy? What kind of assets do we buy? The brand, where they must produce them from. All of this must be driven by our policy. There are some companies, they buy only HP. If you go to other companies, they will tell you they will never use HP. Why? It is part of their what? Policy. And I want to believe that policy is driven by what they want to use the asset for. Planning also includes budgeting. It also includes determining the need. And when you determine the need, you go and check it against the budget, whether it has been budgeted for. It also includes analyzing the cost benefits, whether it will make sense to buy it or not. When all these things are done, then we can now begin to talk about requesting or procuring it, which will include requisition, purchase order. Then you actually go ahead and have some criteria that you require. Then the BU that is looking for it and other BUs, procurement, internal controls, they get involved in approving it. And when it is approved, then you go ahead and start put the asset into get the asset, collect the asset, pay for the asset, and they enter the asset into the fixed asset register. They tag it and they start using the asset the moment it's moved to location. Now that is what you will see in each of those stages, but each of those stages must be maintained appropriately. Remember, what we want to achieve in all this fixed asset management is to get best value from the fixed asset. How do you know you have gotten best value? Number one, revenue will increase. Number two, cost will reduce. Number three, the value you're looking for, you will get it and more. Number four, you would actually have business growth. So those are the ways you will know whether the essence of fixed asset management is achieved or not. And that is why when you are actually deploying a fixed asset management policy, you must ensure that you have interrelated elements, which will include policies, practices, softwares. People must be trained. So it is not so much about the policy alone. You could have policy, but nobody is actually doing recurrent maintenance. You could have policy, nobody is actually assessing the useful life of the assets. You could have policy and nobody is trained to even check even oil. So you will discover that the thing would have knocked before they change the oil. Then you will say that the car is not good. The car was good, you only knocked it. Yeah. So all this is what you actually find inside fixed asset management. Let me take it a step into understanding the elements of the fixed asset management system in itself, which includes people, practices, policies, systems, technology, and on and on. Yeah. One major part of it, or the element of fixed asset management, is the context of the organization. The context. When we are looking at the context, we are looking at the internal environment and the external environment of the company that we are looking at, the organization that wants to buy. When we are looking at the internal environment, we are considering things like the organizational culture. For example, if you are into PR, all these public relations company, the sincere truth is that they are very finicky about how they are perceived, because the nature of their business is all perception. So when many of them are going for meeting, they want to carry a system that is sleek. They want to carry a car that is sleek. But if you work in a manufacturing plant, yeah, I'm talking about the context of the organization. If it's a manufacturing plant, the sincere truth is that even if you carry a sleek system, it's very good though, but it could break inside the factory, and you know. So the context, the organizational culture of that organization is one of those major elements of your fixed asset management system. The culture of the organization, yeah, the vision of the organization, the ethical codes of the organization has a lot to say about the fixed asset management system. Please, I want to confirm that you can still hear me. Am I still communicating, please? Or I've started talking to myself. Please, if I'm still communicating, say hi.
You are, sir.
Hi.
Oh, wonderful.
I
can hear you,
Okay,
sir.
so I can go. Okay, thank you. So taking it a step further, so you need to look at the organizational culture. You need to look at the stakeholder inputs. For example, who are the internal stakeholders? Who are the owners of the business? For example, if you have a business that came in from the US, trust me, you'll be using Apple. So companies like Promasidor, like I discovered that many years ago, I actually did many things with them many years ago, and I discovered that everyone, they just all use Apple. They love the app for Apple, I don't know. But there are some companies, it is the investor, the stakeholder that determine the kind of things that they even use. Yeah. So those particular things also determine to a large extent the fixed asset management system. And when I mean system now, I'm not talking about software alone. I'm not talking about the people alone. I'm not talking about the practice alone. I'm not talking about the policy alone. I'm talking about all of them together. You also need to look at external environment when it comes to the context of the organization. For example, when I mean external environment, I'm talking about the regulatory environment. For example, regulatory environment says you're supposed to be doing you're supposed to be doing reporting on a monthly basis, and the reporting can only work on a Microsoft system. The sincere truth is that you might be bending towards Microsoft then. Yeah. You might also want to look at the socio-cultural environment. You might want to look at the economical environment. For example, with the economy of Nigeria, the sincere truth is that, yeah, you might, rather than going for, you could go for, you can get some laptops that can be like 50 million, like 20 million. One, there are some gaming laptops, very strong gaming laptops. Before you press palm, the thing has given you answer. They are wonderful. But I want to believe that not many companies will buy that for all of their staff. Why? Economical. If the systems were like 50,000 naira for one, I want to believe that they would have bought all those kind of systems for all of the employees. So you also need to consider the economical, the social, cultural, the physical, the regulatory environment to determine the policies you set around this. Some years ago, some companies' policy were truly 4 years. After that 4 years of using a car, they give those cars to their staff. I don't know whether those kind of companies are still doing this. Let me even ask, in your company, after 4 years, do they give the users of those cars, do they give them the cars and say, we'll buy you another one? Do they do that in your companies?
No.
Can anybody help me?
No.
Do they still do that in many companies?
No.
No. Okay. I know that there are some, yes, like your company, like after 4 years.
After 5 years, it will be sold to the user.
Okay. And they still do that.
At a discount price.
At a discount price. That discount price should be the thing that suggests your residual value. Yeah?
No, not the
the
residual value. What they normally do, they will look at the expenses on the vehicle within the 5 years.
Okay.
So the expenses on the vehicle, they will not give it a certain percentage. That is what the user will pay.
Okay.
Aside from the cost.
Okay. So that means that there are still companies giving it. That is very good, really. But I want to believe that I want to believe that sometime in the past, they probably will give that asset to the staff free. Come and carry it. You have done enough for the company. But now, economy will tell them that collect something from me too. So they are considering the external environment to determine even the price to collect at the point of disposal. Yeah, that is the context of the organization. Another thing that is a key element of fixed asset management is leadership. Top level management is responsible for developing the policies, the practices, and deciding the systems to use for this fixed asset management. So in some companies, they use softwares. In other companies, they don't disturb themselves. In some companies, they do fixed asset count. In some companies, they don't because there's no policy for that. In some companies, they do tagging. In other companies, they don't because they don't find any reason for that. But it is all a function of the leaders. So the leadership, when I'm talking leadership, I'm talking about the board that will approve the policy. I'm talking about the management that will develop the policy and also implement the policy. So this particular thing also forms part of the fixed asset management system. So management is expected to develop the objectives, the policies and practices, and bring in the systems that will actually run those practices. And this includes policy development, policy approval, and all that, yeah, within leadership. Another major element of planning is ensuring a structure, a strategic asset management plan. It will determine what is our objective for asset management. Is our objective to save costs? If our objective is to save costs, that means that we might be looking at a car that might, if the objective is to save costs, then you might be looking at, rather than buying this kind of car, rather than buying brand new 2026 Land Cruiser. Let's just buy original Tokes 2023 model Land Cruiser. You will discover that what determines that kind of policy or strategic asset management plan is probably the economy, the context of the organization. Because now I can see that some companies, before they used to buy brand new cars, but the strategic asset management plan has driven them to now begin to look at cars that might not be brand new, but they are actually seemingly new. So to an extent, like 2020, 4 years within range, but you will discover that they are not Nigerian used, they are from abroad. However, somebody have used it in. So to an extent, where I'm going to is within planning, you might begin to look at a strategic asset management plan. And with the strategic asset management plan, it is focused on the objectives. And the objectives could change. So a strategic asset management plan could be for 3 years, could be for 5 years, and it could change. So it's not like a policy that is like a useful life is 4 years for cars. That could be longer. And when I mean longer, I mean policies might stay longer, but plans, strategic asset management plan could be based on the economy. It could be based on the weather. For example, we will not see such in a situation where automatically the cars or the weather of Nigeria just became like the weather of the US. We now have more winters. We have winters for 8 months. Yeah. And we have summer for 4 months. Somehow, God just made it to happen like that. You will discover that we might not be going for Toyota as much any longer. Because Toyota is built with the understanding of the weather of this country. Is built with the weather. So the strategic asset management plan will change based on external environment like weather, sociocultural, economical, regulatory will determine. For example, regulated companies, for example, the regulator might just come and say, every company in oil and gas, you cannot use any other car apart from the ones made in Nigeria. Meaning you can only use Innocent. Yeah, you will discover that will also have an impact on the word strategic asset management plan. Yeah, and remember, the whole thing around strategic management plan is telling us what the objective of the asset management is, who is responsible for it, what is their responsibility, how often will this be reviewed, and the useful life, the life cycle. This is within the plan. And when this strategy is approved by the board, it becomes what you follow. And it has an impact on the practice and even to an extent, some of the policies of the company. Any questions on that? Can I take it a step further? So after you have planned, or planning has been part of the elements of the fixed asset, remember, it is now all about operations. The secret of execution is ensuring that you put some things in place. And when I mean some things in place, I'm talking about how do you actually implement it, these policies, and how you actually ensure that the policies and practices are functioning according to laid down rules, and the technical standards are not sabotaged. Meaning, for example, they have given you a plan to say we must only buy Lenovo. Then whenever anybody is requesting, it must be Lenovo. Because you could have a plan, a strategic plan that says you can only buy Lenovo. Some people will still go and buy Apple. Yeah. So when they bring Apple for approval, which is part of operations, that is where controls must have its place. You must only implement functional policies that are within the approved framework, which is the strategic asset management plan. Yeah, and beyond that, operations should also include things like your maintenance, tagging, physical inventory, security, onboarding it into the asset register, safeguarding those assets, tagging them, tracking them. All this is within operations. Yeah, and also a key element of the fixed asset management system is support. Yeah, which is talking about having a support system to ensure, for example, asset management is, we always assume everything will function well. That is why when you give a car to somebody, you don't even, or you have assets in the books, there's no tracking of whether the asset is functioning well or not. We just continue depreciating. Then at the end of the period, we say the asset value. However, the asset is broken down. The chair, they pieces it. They've used it to vehicle. However, inside the books, is still having a figure of 1 million. Why? Because the asset is inside somewhere. And they carried it and they threw it away when it wasn't working. And there was no update on the asset register. This is what happens in many companies. Because to an extent, many of those companies, whenever you're now doing assets count, they only just count some of them and see if I don't see some, and we move on. So to an extent, we need to begin to look at the support system. And most importantly is performance evaluation. And performance evaluation is now looking at the performance of the assets vis-a-vis what you expect from it. What do I mean by expect? Useful life. Remember, I explained earlier on that useful life is the period over which management expects. So you are comparing it at every point in time. That's why I explained to you that IAS 16 requires that at end of each year, you should review the useful life residual value and the depreciation method, because it is possible that by use, actual has told you that what you are using is wrong. So what do you need to do periodically? Do what they call performance evaluation. Is it functioning well? If you are doing performance evaluation, you will know from scratch whether you should change the end. You know, there are some cars you will buy from abroad and you will discover that, oh, you need to actually change some things in there immediately. But if you don't change them immediately, you will discover that it could have affected other parts of that particular machine. And that machine will now begin to give you less output. So what must you do? Ensure that you do a performance evaluation periodically. Some companies will do this half yearly. Some companies will do this quarterly. Some companies could also do it annually. Monthly is too much. Depending on the kind of company you are, however. But however, ensure that you actually have periodic evaluation. Do we need your official sale register? Do we need to disturb ourselves with performance evaluation? And what do we do? How do we Trust me, I've been talking to myself. I can now see that I've been talking to myself.
Oh, we are listening.
Anybody wants to help me?
We are following you.
Yes,
No,
how do we do performance evaluation? Yes, how do you do performance evaluation? Do we need to do performance evaluation for chairs and tables? Let me say this. Please, don't go and take a asset valuer to come and value a share of 20,000 naira and pay the valuer 1 million naira. That one is economically not wise. So whenever you're going to do your performance evaluation, ensure that it is not with exorbitant cost, undue costs. So when you're actually just tracking these things, you can just do a review by yourself for some of them. However, major assets that you don't have technical know-how, you can get a technical consultant to come and review such performance. Especially, I know for power generating plants, oil and gas, there are some assets that periodically the manufacturers will come and actually assess themselves. Why? Because they are very, very, very important, and their values are in most cases very high, considered in comparison with the value of the business. Yeah. So performance evaluation should be done without due cost, however, should be planned and executed. And when you are executing this, just ensure that the cost does not outweigh the benefit that is in there. And the last element of fixed asset management is continuous improvement. Yeah, continuous improvement, whether in the policies, whether in the practices, whether in the systems, or whether in the value of what the systems bring out. So we need to ensure that we're, so those are the key elements, yeah, of what you, so it means key fixed asset management activities. After discussing that, we include things like needs analysis. When you are doing your acquisition, you want to check whether do we really need this asset. People just want to buy things sometimes that they don't need. Yeah. Economic justification. When you're doing need assessment, you want the economic justification of the asset. Planning. Planning starts from even budgeting. Planning starts from even policy development. Planning starts from strategic asset management plan. Yeah, and budgeting. The pricing is a key element of acquisition, because at that point you want to be sure that basically it is within the cost element that is already budgeted for. Beyond that, remember, all this is acquisition and recording the moment you have acquired. And valuation. Valuation can only be done, like I said, if you are doing valuation as a business, as a model for depreciation. However, subsequently after initial recognition, like I said, the system requires that you review the useful life, residual value, and depreciation rates that you are using. So with that, you are looking at the asset, start having to change the value from costs. Then you are reporting it, and periodically you're doing asset maintenance when you do physical verification that the asset still exists. Remember, the reason why we do physical verification is for two major reasons. One, we floor to sheet to floor. Floor to sheet is to ensure that the asset that they have in the book is also existing. So the financial statement assertion that it gives us the assurance on is existence. And when we do sheet to floor, we are looking at existence. When we do floor to sheet, meaning we are looking at asset and tracing it whether it's in the books, we are looking for completeness. So those two things, those two financial statement assertions are the things that count for physical verification will give. And we also have disposal as part of the activities in there. Okay, key fixed asset management, when you look at maintenance and repairs, maintenance, you could have scheduled maintenance, which could be monthly. In some kind of companies, it is monthly, it could be daily, it could be weekly. And the whole essence is to ensure that it is doing what it's supposed to do. Yeah, and you could have repairs and maintenance that are periodical and sometimes not scheduled. For example, when the team is not doing what it's supposed to do, you want to check very well. Yeah, you could actually have all those repairs and maintenance that are not scheduled. And remember, when you're looking at all this, you also need to look at capitalization. Let me even ask a question. If we are doing a repair of a major asset and we are buying a significant, let's say a car, and we are changing the engine, do I need to capitalize it or expense it as part of repairs and maintenance? The engine of the car, not, and we are changing the engine. Do I need to, is the changing of engine repairs and maintenance, or should I capitalize it? Please, did you get? Should I capitalize repairs or change of change of the, should I capitalize it or expense it?
You capitalize it, sir.
Capitalize.
Okay, let me ask you a question. Have you been capitalizing it? And if you are capitalizing it, let me paint my example very well. The car was supposed to be for 5 years.
Hello, sir.
You have used the car already for 3 years. What is the useful life of the engine that you are buying?
Come again with the question, sir.
I said that if we are buying an engine, the car was supposed to be depreciated for 5 years. The residual value will be 0. And we are now in year 3. Now, end of year 3. Now, we are buying the engine to change the engine that was inside before. I'm now asking you a question. That should I depreciate, should I capitalize it, or I should expense that engine that we bought? And if we are capitalizing it, what is the useful life of the thing we are capitalizing? Please, you understand my question?
Yes, I understand. So it will be capitalized, but now the useful life, because now that new engine that we just bought now is adding value, has added value to that car. So it should no longer be, the useful life should no longer be 2 years. The useful life should no longer be 2 years, but rather we should now look at the depreciation that will be charged on that new engine that was bought.
Okay. So let's look at, yes, thank you very much. So number one, when you are capitalizing such, we need to begin to ask ourselves, what is an overall? An overall, the difference between an overall and normal repairs and maintenance is that overall elongates the useful life of an asset. Repairs and maintenance does not elongate, it keeps it the same way. So in the example I just printed, I can see many people saying that the useful life of the engine will be 2 years. However, if that engine will make the car to look now brand new again, and management is of the opinion that the moment we buy engine, we are not going to change this car for another 4 years. So it is now management's assumption, expectation that it is not 2 years alone because we have invested too much money to buy engine. If you have bought engine that is like 3/4 of the cost of the car itself, why would it now just be used for the same 2 years that is remaining? So you need to assess the useful life of that asset as overall. And at that overall, it would have elongated the life. So the life would have now become 4 years for the total asset, including the engine. Please, did you get what I just said?
Yes, sir.
So the people that said 2 years, yeah, but you see, a normal overall will elongate the life. Yeah, please, did you get what I just said, sir? And mass. Any questions on that? Can I take it a step further? Okay, if you have any objections, okay. Okay, upon change, if the change will increase it, yes. So you need to capitalize it, like I said, and it could also elongate the life. So the life might not be 2 years any longer. The total life of the asset, including that thing you're adding, might now become like 3 years, 4 years, depending on how management would generate economic benefit from it. Yeah. So another major activity that we put in there was count. And I explained that when you are doing counts, some companies will do monthly, some will do yearly, some will do quarterly, just do counts. Yeah. However, depending on the kind of company you are, in a kind of company where you buy major assets and you just don't buy everyday asset as much, you can just be doing quarterly, yeah, or yearly. But in a kind of company where you actually you change assets every two days, every day you buy new assets. Asset acquisition is a recurrent and daily thing. Then you might be looking at probably monthly or quarterly, but you don't need to do weekly or all of those kind of things because they are PP&E. Yeah. So annual fiscal count or periodic fiscal count, you have to count all the assets. And when you are counting them, you are doing floor to sheet to floor. So when you are doing floor sheet to floor, you are determining whether you can find the assets or whether you can't find them. You can also recording their location because Many asset registers, when you look at them, they will put location there that the asset is in this place. If you go to that place, you won't find the asset. Why? Because asset register is saying X, reality is saying Y. The car, they say is in Kaduna. However, the car is already relocated to Lagos. So if they now say we want to do, somebody said they can't see my screen. Please, can you see my screen?
No, sir.
No, sir.
Please, can you see it now? I felt you could see my screen since. Please, can you see my screen now?
Yes, we can see it, sir.
Yes, sir.
Okay. Wonderful. Okay, so I said count. When you are doing your count, make sure count is not just one of the major reasons for counts or asset count is to be able to determine whether the location of the asset is still the same. To ensure that the asset is even existing. I explained before the real financial statement assertion that count sheet to floor answers is existence. That what we have in the book is here exist. Is here existing? The answer is either a yes or a no. So that is why whenever you are doing a fixed asset physical evaluation or physical count, please, in that register that you are using, have a place for location, have a place whether you found it or you didn't find it, to tick them and put appropriate locations in a situation where the location has changed. And the reason for this is to be able to update the fixed asset register, because many fixed asset registers don't even know whether the asset is existing or not, whether the asset is even working or not. Another major reason is for impairment. You see, I was doing AES. AES is, I think it has been sold off to, I think, Egbe Power Plant. Egbe, I think Sarah bought it. I was doing the IFRS conversion in 2010, I think, and I went there and they showed me the badge. The power generating plant is on water. So they showed me the power generating plant. They showed me how it works, because we were trying to do what they call componentization exercise. One, because the total asset was one money in their books. So I asked the CFO, I said, this thing, have you ever tested it for impairment? He said it has never been impaired. I said, how did you know? Because in most cases, we don't even know how to assess for impairment. Should I shock you that physical count is one of the ways you assess impairment? Because that is where the information for impairment computation, one of the places where you will get the data that you need to determine if there's objective evidence of impairment or not. So one of the things you should have in your physical asset verification register is he impaired? Is he working as he should work? When you are beginning to see things like it's not functioning the way it's supposed to function, that is already a trigger of impairment. What exercise helps you to determine that physical count? So please don't do physical count in your company just to say, is it there? Yes, finish. No. The essence of physical count is not only for existence, it's also for what? One, ensuring that the asset is in the location that is documented within the register. Two, ensuring that the assets operational functionality is still the same thing you expect. When that has gone lower, you are now looking at assessing it for objective evidence of impairment. And that is actually one of the things that you do as part of fixed asset management. Another major thing that you need to do is what I call floor to sheet or floor to book. The first one I spoke about was sheet to floor. Sheet to floor is for existence. Sheet to floor is to actually be able to determine the location where those assets are. Sheet to floor is also to check for objective evidence of impairment. Now, but floor to sheet is to check for completeness. Floor to sheet means I will go and look for the asset. I will now say, is this asset in the book? What are we checking for? We are checking whether there are some assets that have been bought that they were never registered in the books. For example, there are many companies that they buy tables, chairs, and when they were buying them, some especially companies that have branches, they would have expensed them. Whether knowingly or unknowingly, I don't know. At those branches, you just discover that they put it somewhere. When they are now doing asset verification, you will now discover that this very big chair, this car is not even there at all. You will now begin to look at whether we have assets that are not captured, and that is completeness. We are saying, is the fixed asset register complete? And the answer is either a yes or no. Another thing that will also help us with is to be able to actually investigate assets that are missing. Because the sincere truth is that, if, for example, you see an asset is missing in the books, you want to investigate it. Have they started bringing asset that doesn't belong to the company into this place? Or they have started doing some unscrupulous things within the books. So completeness check will show you all that, including ensuring that you are able to update the asset register of the company. And the sincere truth is that this in all will help with proper fixed asset management, because sheet will be telling you what is physically at those locations. You won't be saying there's a car when the car is already not. You say you have a conference, 100 conference chairs and tables. In reality, you only have 10. The other ones, they are broken. And you are carrying them at the correct figure, or figure that they bought them. So there might be, so one of those things that this helps you to do is to ensure that those assets are, and in all this, when you are bringing them into your books, you are looking at reconciliation and ensuring that all the assets are tagged, the assets that are existing are the things in the books, and the amounts of, for example, you discover that there's an asset that was not capitalized and is within the capitalization limits, then you capitalize them, and that solves completeness issue. Yeah, so that is some of the things within this asset management. I have a simple question here that I want to read out to us, and I would like us to just look at it together very quickly. I'm going to actually take just close up by 12. So let me just read this question. AVI PLC is a multinational manufacturing company with operations in 45 countries of the world. Its fixed asset policy dates to 1952, when the founder, Shawakelu, created the company in Chicago. Each asset's useful life is determined by the user of the assets. E.g., when the company car is allocated to a new employee, the employee can determine if the useful life will be 5 months or 48 months. In order to enhance quick decision making, all company financial controllers are empowered to determine the useful life cycle, residual value, and depreciation method to use without input from the head office in Chicago. Staff members are encouraged to specify and identify the assets that would aid the performance of their work and communicate the same to the country financial controller for purchase. Staff can carry assets from office premises if it will help them deliver on their work without any form of communication to management. Please, analyze the fixed asset management policies of the company. Analyze what is wrong with this company. Yeah? What is wrong with this? The policy and practice of this company. What do you think is wrong with it? But are they okay? If they are okay, I support you. Do you think the company is okay? Abiodun, you have your hands up. Okay, if you still have any questions, so please, do you think this fixed asset management policy and practice is optimal, and why? Please, can anybody help us out? Do you think this fixed asset management approach is optimal, and why? Okay, so you can answer, please. Anybody can answer because. Please, can you still see my screen?
Yes, we can.
Yes, we can see us.
Okay, so what is wrong with this fixed assets policy and practice? Are they okay? Because I won't lie to you, this is a company that anybody would like to work in. I will just tell the MD, I need a Lamborghini. It will help me to move fast from my house to the office. What is wrong with this company?
Yes, sir, I want to try.
Please go ahead.
Okay. From what we have been taught this morning, and looking at comparing it with this case study, the fixed assets policy is porous. Because one, there's supposed to be a uniformed assets lifespan for any asset. And like we also learned today that even the depreciation value, the company is supposed to maintain a particular depreciation method for depreciating a fixed asset. Whether you want to use the cost method or want to use the revaluation method. But from what we are seeing here, there's no particular method in practice. So, and it's supposed to be a uniformed policy. And the problem is, okay, it's even the company's policy that they can determine what they want. But for me, I see that this is porous. Anybody can bring in any asset to the organization to work. It can also lead to theft. So there are many things faulty from what I'm saying in this case study. Thank you, sir.
Thank you very much. Thank you. Okay, any other question? Any other poll? Any other problem with this beautiful company?
Hello, sir.
Any other person, please? Go ahead.
Okay, from my own point of view, looking at this case here. Hello, can you hear me, sir?
I can hear you very well.
Okay, I'm seeing a kind of a lack of structure here in this case, because when there is no system, this is a case that you allow the staff to determine what they want. So in that case, I think the system, there is a lot of porosity in their system, because a system where you determine, where you ask the staff to determine what they want, I don't think that company can stay longer. I don't think that company can exist, because anybody can determine what they want. Look at the case scenario now that a staff just say, this is how I want this thing to be. I don't think ethic is not there, and it's open to the fraud. I think that is my own point of view there, and which is not attainable in accounting. Thank you.
Okay, thank you very much. Any other thoughts? Thank you very much. Any other person, any other thoughts? Any other thing wrong with this company?
Sorry.
If there's anything wrong.
Yeah, hello, good morning.
Morning.
So for me, I would say it's going to cause issues during audits, right? Like let's say the auditor is about to look into the accounts and there are like different depreciation policies that's being used, especially for the group audits. So it's going to cause it's going to be difficult for the auditors to recognize what policy is being used by the company in order to be able to track assets in the company, and which will eventually also lead to theft. So it's going to cause issues during the group audits. So that's just one thing I see about this policy that's being practiced by the company on their depreciation of fixed assets.
Okay. Thank you very much. You've all spoken well, really. That's the truth. We've all spoken well. It's a multinational company in 45 countries of the world. Its fixed asset policy dates to 1952. that tells you already that that fixed asset cannot be IFRS compliant, because policies are supposed to be reviewed, periodically, 3 to 5 years. Because if you have a fixed asset policy of 1952, I won't lie to you, it might not be in compliance. Even IAS 16 is not as old as that. So it tells you already that they need to review this policy to make it compliant with IFRS, IAS 16 when it comes to PP&E. Yeah, so that's one of the issues. Then they said each asset useful life is determined by the user of the asset. To an extent, a user of the asset is not the one that determines, because the useful life is management's estimates, and not everybody is management. So management estimates are documented as what they call policies. So each person cannot be determining. So that is another issue. When it comes for, so they give an example that everybody just is doing. So there must be policy around useful life, residual value, and depreciation method. Now, there's a difference between depreciation method and depreciation model. There are two depreciation models, and they call them cost or revaluation. And there are many depreciation methods. Methods are like straight line method, sum of the year digits, so all of those ones are the methods. Yeah. Useful life is a function of how management intends to generate economic benefits. So it is something that is driven by leadership. So it needs to be approved. This can't. It's the management staff to execute, and it can also suggest the policies to the owners of the building or review and approve them. Yeah, whether it is the useful life or the life cycle or the residual value or the depreciation method, all of this needs to be agreed by the owners of the business. And until RDPLC that has branches across. So the owners, the board of that company needs to agree on that. Staff members are encouraged to specify and identify the asset that would aid the purpose of their work and communicate the same to the company to purchase. In all sincerity, if everybody can say this is what I want, everybody will mention anything. However, it is the company that understands the objective that also needs to be to identify the kind of assets that will achieve that objective, not staff. If you ask everybody, what kind of phone do you want to use? I think to an extent is 46 or any other. And if you buy, say for example, you buy a phone of 5 million. However, you are generating, say for example, 1 million, 6 million for the company on a monthly basis. The sincere truth is that the company might not break even with that strategy. Yeah, so to an extent, it is the company, management of the company that will determine the assets, the resources required to achieve the objective of the company. Staff can carry assets from office premises to deliver without any form of communication to management. No, to an extent, it should be driven by the policy. In some companies, especially auditing firms and consulting companies, you know you can carry the assets to any situation where you can deliver. But in a situation where your work is within an office, you can't just take the assets of the company without appropriate approvals. I want to believe that we have done justice on this. I use this second one to wrap up for this point in time. Let me just take Apodi PLC is a local manufacturing company in Zuzuland. JJC Bobo has just been appointed as the financial controller. From reports obtained about the fixed asset management system of the company, he noted the following. One, no asset can be purchased, be exposed. Just an award to the company as the best company in the category of fixed asset management last week. 3, asset useful life cycle, and depreciation method are hazardly allocated. So meaning that they can allocate for this one, say, use straight line method. The other one, use sum of the year digit, sum of the digit. The other one, unit of production, and on and on. So the next thing that they said here, they said asset verification is conducted every 5 years. Current practice, the last time it was updated was 6 years ago. MS Excel is used to maintain companies' asset register. Sometimes this proves difficult as communication within the company or status of is not time online. Recently, the major machine of the company has underperformed in production. Actual production has been 65% of the production capacity. And the last one, the auditor flagged the accuracy of the fixed asset register as an issue in the noted was there were ghost assets in the asset records. Please, what do you think is wrong with this company? Still wrong because they just gave them award though, as the best company in the category of fixed asset management. Is there anything wrong in what this company is doing? Please, responses, please, 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 please. Is there anything wrong in a company that just got an award from IFRS that they are the best in asset management in the whole world? Hello?
Hello?
Yes, we can hear you. Yes.
Okay, great. Okay, from this
We can
case
hear
study
you. We can hear you very well. I can hear you.
Okay, great. From this case study that I'm looking at, I'm looking at asset useful life cycle and depreciation methods are hazardly allocated. That is not right. When you look at it with regards to the standards, it's not right. The asset verification is conducted every 5 years. No, for any organization that knows its onions, at least for asset verification, you should do it biannually and annually for statutory audits, then also for your internal controls and all that. So those are two major things I can see wrong here.
Okay. Thank you very much. Any other thoughts? Any other additional wrong thing? Or this company is just perfect? Comment to... Yes, we can hear you very well.
Okay, so for the fact that the asset useful life and depreciation methods are hazardly allocated, so some are using straight line, some are using reducing balance methods. That's because that is shows that the policy is not unified. So it will cause discrepancies, it will cause financial reporting issues. It will also cause audit issues. A lot of audit errors will be found. Also, the useful life is supposed to be unified. That's why it's called a policy. Everybody's supposed to follow the policy. All the branches, all the assets should be unified. The useful life is unified. Also, no asset can be purchased or repaired or disposed without the board's approval. I believe that for disposal, yes, board approval can be imposed. But for even for purchase, the board approval can be imposed. But sometimes the rate at which damage can occur can require repair to be done by management, approval by management. Yeah, so board approval, it depends on the frequency of the board approval, if the board members are even available. So purchase, disposal, that is relative. It can depend on the company. Then the regulators just okay, that's Verification every 5 years, of course, that is already a red flag. Management policy is reviewed every 7 years. The last time was 6 years ago. That is a red flag. We have to review it. The standard expects the management to review these policies every year, every 12 months, because of economic changes, because of industry changes, and all those market considerations. So one has to review this every year, every 12 months. So that is already a red flag. The Excel used to maintain the company's asset register sometimes it proves difficult. That has to be looked into because there will be errors, there will be issues in financial reporting as well. The major machines are underperformed in production. So that is why the frequency of review of these things has to be closer in each other. Actual production has been 65% of the production capacity. That has to be looked into because it shows that even the return on capital employed, return on fixed asset will be low because the capacity is not being maximized. So that has to be looked into by management. So all these are red flags by the company. The auditors flagged the accuracy of the fixed asset register as an issue in the last 3 annual audits. So they don't, and this ghost asset is already a very serious red flag. That means assets are in the register, but they don't exist physically. And that is because of the wide period of asset verification. So the company is in trouble if they don't address this issue.
Okay, thank you very much. I think we have all spoken well. So you've all spoken well. There's nothing too much I want to say. It has been dealt with well. No asset can be purchased, repaired, or disposed. If you say everything board approval, that means board is already a staff. That means that the board has not given the management any responsibility. That is a red flag, really. So to an extent, yet purchase of assets that are significant, but not purchase of a table and chair. You go to board. That might be a little bit, especially board that only meet quarterly. That means that what you need, you will wait for 3 months before you get them. So to an extent, that might be too much. So we've all spoken about all this well, so I think I don't need to speak too much. Thank you very much. I'm going to stop at this point for now. Any questions as I wrap it up here now? Any questions for me? Have you learned anything? Let me ask that one first. Is it a waste of time? It's about 2 hours. Have you wasted your time?
Oh, I'm sorry, sir. I have a question. Hello? Can you hear me? Hello, sir.
I can hear you. We can hear you.
Okay. Yeah. I wanted to ask if the recordings and the slides used for this program will be sent.
Yes.
Is there?
It's been recorded, really.
Yeah, like how would we get it? Is what
So,
I'm trying to know.
okay, so I'm sorry. I was just informed they sent on the chat here. Please click on the chat. On the chat here, you will see a Google form. Please just fill the form. They will use those emails to send you the recordings and probably the slides too.
Okay.
Please, did you hear what I just said?
Yeah, I heard you. Thank you, sir.
So just fill the Google form, please. I missed that out. If you fill the Google form, they will send you the information. Yeah. Thank you very much. If no questions for me, I'll just say thank you. Have a lovely, lovely day.
Thank you.
Thank you very much, sir.
You're welcome, ma. Please
Thank
fill the
you.
form so that they can, the Google form,
Thank
please
you
fill
very
it so that they
Thank
can respond
you.
back to you.
It was
Thank
an
you very
awesome
much.
class.
Thank you, sir. We
Thank
appreciate
you.
you, sir.
Thank you.
Producer HR, what is it? HR. This one. It's really. Okay. Vivian. Vivian and Kiruka. Wait.
It's a good job. Ìṣàkóso àgọ́ wọn lè gbé yín dání bí òfin ṣe ṣe báyìí. Ẹ wo 12 kìlò. Wọ́n tún lè bá 2. Sábà ti lọ bí tán lọ́wọ́ padà wá mímẹ́lẹ̀. Tó mọ níbo lè fẹ́ lọ lé báyìí. Tí mo bá tó pẹ́ jù tó máa ní láti lọ́dọ̀ tèmi náà. Ẹ̀dá kí wọ́n jẹ́ kí wọ́n.